This isn't disclosure for disclosure's sake. It's not campaigning. It's not sort of politics in that sense of the word, but instead is designed to help companies understand, identify, and communicate the sustainability-related risks and opportunities that will affect their enterprise value, their strategy, capital allocation, and frankly, their resilience to operate.
Welcome to Business Talks, a podcast by Saffery. I'm Tom Alun-Jones and joined by my co-host, Zoe Thomas.
Hi, everyone.
And today we're joined by Saffery's Sustainability Director, Alastair Loasby, to talk about some of the new sustainability standards, as well as the broader sustainability landscape that impacts our clients.
Hi.
Alastair, before we get into too much detail, sustainability is a fairly broad concept. Could you give us an overview of your role and how you're helping Saffery clients?
Sure, happy to. Well, first of all, thank you for having me. I'm the Director of Sustainability and ESG here at Saffery, and essentially I've spent the best part of a decade working with companies across the country to become more sustainable, from startups to small businesses, owner-manager businesses, through to some of the largest companies in the country and beyond. And really delighted to share some of those experience with you today, but also our broader network here at Saffery. It might be worth just sort of defining what we mean by sustainability to kick the conversation off. It gets talked about a lot, lots of different interpretations of sustainability and ESG, but for me, it boils down to the long-term strategy of the business. So what are the issues that will affect your business over a 5, 10, 20-year period? What are the sort of mega trends? How's the world going to be changing over that time period? What are the risks associated with it? Often environmental, often social, often governance. And then how can your business start to affect change on those issues as well, mitigate those risks and bring about some positive opportunities? So to try and bring that to life a little bit, recently talking to a company that part of their supply chain grows coffee, for example. And over the last couple of years, they've been really struggling with some of the extreme weather, seeing how that's really hurt their yields, but also how the destruction of nature has started to affect the number of pollinators and how that started to affect their yield as well. But on the flip side, when they're able to tap into more sustainable practices, not only does it improve their yields, but it also starts to create new customer opportunities. People are increasingly looking forward for these sort of sustainable products out there. And I talked to a high street brand recently, and they see that their cost of sales is higher in areas of the country that are more deprived. There's more vandalism, there's more shoplifting, and it just starts to really play on the bottom line of those stores. Whereas where they've started to more actively benefit those communities and build those relationships and start to work on some of those issues, then they see much greater customer retention and those cost of sales comes down. So fundamentally, that's what sustainability is. And that's what we're trying to help our clients at Saffery with, understanding what those big risks are, what those big issues are, and helping them to turn them into their real business value creation opportunities.
Great. Thank you. I think that's definitely helped me understand what sustainability means. And I think sets us up quite nicely for today's conversation. So what we're really going to talk about in detail is the UK sustainability reporting standards. And I just want to kind of start by taking a step back and get you to explain what the current sustainability reporting landscape looks like for UK businesses today, just to set the scene.
Absolutely. And in the current landscape, businesses are already dealing with a pretty large mix of frameworks and requirements. Many will be looking at TCFD, which is around climate-related financial risks and disclosures, or SECR, the Streamlined Energy and Carbon Reporting Framework, which looks at energy use and carbon emissions reporting. The UK Sustainability Reporting Standards aims to modernize and update that. But if we take a bit of a step back, then this all started in Glasgow in 2021 at COP26, and what's called ISSB, so the International Sustainability Standards Board, was founded at that COP26 with an aim to create a global baseline in sustainability disclosures, and specifically for investors to help them have access to comparable and decision useful information on the sustainability of the businesses that they were looking at. Beyond this framework that they were working on, there are hundreds of other sustainability reporting standards out there, and it's far too complicated for businesses. And so the idea is that this becomes the sort of global baseline. It took them a couple of years, and then in June 2023, they published IFRS S1 and S2, which are these global standards for how you report and disclose on sustainability. So there's two parts of those standards. S1, standard one, is your general framework for sustainability disclosures. Which issues are important to your business? What are the risks associated with them? And then how do you think through the governance, the strategy, the risk management, and the metrics and targets associated with those risks? The second part of those standards, S2, is climate specific. It's very similar and built on TCFD, but essentially, how is climate change affecting your business? What are the risks associated with it? And how are you managing those risks? That framework, those S1 and S2 standards, have then been endorsed and adopted by some 35 jurisdictions around the world. And most recently, the UK government has also started to adopt them. They've made a couple of minor tweaks to make sure they fit in with the other regulatory landscape here. But fundamentally, they've adopted them, and that's become the UK Sustainability Reporting Standards, or UK SRS. And the sort of the government intent behind it is to deliver a world-leading sustainable finance framework. And the UK SRS were then published to enable that. At the start of the year, they were published for voluntary adoption, and we'll probably get onto this, but we're expecting that to then be mandated over the coming years as well.
So, Alastair, it sounds like businesses doing parts of this, kind of measuring emissions and thinking about climate risks, but it hasn't necessarily been joined up. So that's kind of what the UK SRS is being brought in to do. Am I understanding kind of what the UK government is aiming to achieve?
Absolutely. So it's made sense that the government would start with looking at emissions and measuring climate risks because it's so existential for so many businesses. But this is an opportunity to, first of all, standardize that so that if you're looking at a company in the UK or Australia, it doesn't matter, they're using the same framework in how they communicate it. But then it's also going beyond that as well. So for that high street brand, for example, that I mentioned, if one of their big material issues is levels of social inequality and social deprivation, then as an investor, this is how you'd want to understand that and how you'd want them to be thinking that through and disclosing it.
Great. I think what you've set out quite clearly there is the kind of the journey to get to SRS 1 and 2 being out there. And these are available. You can go online and have a look at them. In terms of who is adopting them, what sort of pressures are businesses under, either regulatory in the sense that they might be mandatory for them, or they might be getting pressures from external sources like investors. Will you just talk us through the kind of the story of who has to, who might, and the direction of travel in the future?
Yeah, absolutely. And you're right to start by saying that these are voluntary at the moment. There are a few companies that are already getting involved and already looking to disclose in line with them, but it is still voluntary at the moment. We're expecting it to become mandatory over the next couple of years. So we'll look at that sort of mandatory piece first, and we'll come on to the broader stakeholder piece. At the moment, we're expecting 2 consultations. The first one is from the FCA, looking for companies under their purview, especially listed companies. They had a consultation earlier in the year to understand and to communicate and to sort of talk through and to discuss the implications of what this means for their businesses. That closed in March. And essentially what they were proposing was that they were going to replace the TCFD reporting requirements with UK SRS. We've got a couple of months to wait. Autumn 2026, we're expecting the outcome of those consultations to be published. And during those proposals, it's expected that January 2027 is when companies would first start to have to capture this information for their subsequent reporting years. The other interesting part of that proposal was that the standards will be rolled out in a staggered and sort of staged way. So in the same way that they've been looking at climate-related risks through TCFD, the first part of the UK SRS that will be mandated through that proposal would be the climate emissions of the S2 standard. Scope 3 will also be slightly staggered after that. We can get into what these terms mean. I appreciate it's sort of a bit technical. And then the S1, that sort of general sustainability framework, that's also initially on a comply and explain basis and expected to become mandatory in following years as well. So a bit of a staggered approach from the FCA. For companies that are reporting under the Companies Act, non-listed companies, then we're expecting another government consultation later in the year as part of a broader consultation around modernizing corporate reporting. Again, the expectation is that they will close the gap between listed and non-listed companies. And so those companies that are in scope for TCFD at the moment will likely move over to report through UK SRS, potentially in time, those smaller companies as well, potentially those in line with SECR, but we'll have to wait and see what the proposal lines up. So that's the sort of mandatory consultations that we're working through at the moment. And by the end of the year, we should have a lot more clarity on what that looks like. But what we've seen from the other countries around the world that have been adopting these standards or similar standards is that the market often moves much faster and much broader than just through the mandatory regulatory framework. And especially in two ways. The first is through the supply chain of large companies. So if large companies are disclosing on this, they're not able to disclose accurately without understanding the risks associated with their supply chain. And so many companies that are in these supply chains will start to have to report alongside it. And UK SRS will become the standard framework for doing that. At the moment, you might be being asked for some emissions data, maybe some policy data, maybe some work around your diversity inclusion, for example. Chances are that will start to shift to align with UK SRS so they can more easily and more accurately communicate that through their own reports. The final part of the puzzle then is investors and lenders. I mentioned at the start that the intent behind these frameworks, the global level, is to give investors the information that they need that is comparable and decision useful. And so in some of the other jurisdictions, we've already started to see investors asking their portfolio companies to report in line with IFRS S1 and S2, even if they're not required to do it by law, because it then allows them to look at their portfolio in a comparable way and really understand in detail where their risks are and how that's affecting their business decisions. So yes, at the moment it's voluntary. We're expecting a couple of consultations to be closed over the next few months that will make it clear as to how this will then be regulated and mandated across the UK economy. But beyond that, we'd expect the market to move pretty quickly as well.
That's really interesting. I've started to see parallels within tax as well as the financial reporting. And I suppose, as you've just said, once these frameworks get adopted, things seem to move fairly quickly. And from my perspective, I've seen certainly on transactions that it's not just the regulation, it's also driven by investors, supply chain, and other parts of kind of like, I suppose, the whole business operation, so that it's actually becoming a bigger and more important role that people actually have to start to take seriously and do something about, rather than just think, oh, yeah, it's going to come at some point. I think it's coming quickly around the corner.
I think you're absolutely right, especially because it's building on the back of other reporting frameworks like TCFD. So in the financial services world, Tommy will know this better than I do, a lot of asset managers are already looking at TCFD and already working through these frameworks. And so they'll just much quickly move over to these new standards. It's just a sort of change in technicality as opposed to a new way of working. So yeah, we really do expect it to move pretty quickly through the market.
Great. Thank you, guys. I think we've covered quite a lot of ground so far. So I thought I would just do a very quick summary for those of us who are not as au fait with the progress. So legislative wise, we've currently got SECR and TCFD for UK businesses. We've then SRS 1 and 2 are out, but not mandatory. And then we've got a number of sort of consultations in the future, which will help us understand from a regulatory perspective how and who these standards will impact on a compulsory level. And then you kind of talked us through how there might be a voluntary requirement, and I use those words sort of slightly deliberately, for smaller and medium-sized businesses. So you talked about the pressure of larger supply chains. You talked about other regulators, potentially like the FCA, as well as a kind of lender expectation or benefit. So I think we have covered quite a lot. There is always that risk that some entities, particularly maybe in the space that we live in, which is the kind of OMB space, that they might just view it as another compliance burden. What would you kind of say to people who might think that?
I would say that at its best, this is designed to not just be disclosure for disclosure's sake. I'd go back to the intent behind the frameworks, which is that decision useful information for investors. So this isn't disclosure for disclosure's sake. It's not campaigning. It's not sort of politics in that sense of the word, but instead is designed to help companies understand, identify, and communicate the sustainability-related risks and opportunities that will affect their enterprise value, their strategy, capital allocation, and frankly, their resilience to operate. The reporting framework aims to just improve access to the management information that enables them to understand and get into and act on those factors through scenario analysis and measures and targets and what have you. Information can then help to unlock access to capital, investor confidence, increase the resilience of the business. That's when you start to get into the business case for sustainability, I suppose. But the key is having that access to information and how it relates fundamentally to the financial performance and financial materiality of the business. And so if I think through a couple of the businesses that I've been talking to recently to try and bring this to life and make it a little bit less sort of theoretical, perhaps, then I was talking to a large car sales dealership, for example, and they'll sell premium cars across different parts of the country. If they start to look 5-10 years ahead, then their whole business model could fundamentally have to change as we transition away from internal combustion engines towards electric vehicles. And alongside that, you then expect they'd have to change how they think through talent, attraction, retention, the skills that they need, start to think through their supply chain will have to change, their facilities, what they need on site, their brand, how they educate customers. It's a whole transformation for their business that they only really start to understand and identify when they're thinking through what the future looks like over those 5, 10, 20-year time horizons. And equally, the manufacturing sector, for example, I was talking to another business recently, and they were thinking through, again, what are the sort of risks that are affecting their business from an environmental and social perspective over the next 10 years? And a large extent, it came down to access to talent for them. And so they were then able to put in place factors that made a material difference. So they started paying the real living wage, for example, and started to think about how they communicate all of their sustainability work as part of a broader package of attracting the right people and retaining the right people. And that has a direct benefit for the business in terms of resilience and frankly, their bottom line as well. So I can see how it's easy to see these disclosures as a bit of a compliance burden, but the insights that they can unlock can fundamentally make a difference to the resilience of your business and how it performs as well.
Then from what you've said, I can take away from that, it's going to hit mid-sized businesses probably much earlier than the actual regulations suggest, because it's going to feed into many different parts of their business from different areas. And also it's hitting them from things like, as you're saying, attracting talent, getting investment decisions, looking at tax efficient models, how they're accessing their capital, getting funding, etc. So it's going to have a much more significant impact on people's businesses than probably they've first thought.
Absolutely. And I think that's one of the key lessons that we can learn from other markets around the world as well. My team's done work in Australia, for example, where they're sort of a year or two ahead of the UK with these standards. And there's various different lessons that we can learn, I suppose. But one of the key ones is that, adoption happens through those value chains and from investors. It changes the market a lot quicker than the legislation does. And also that it can take companies quite a long time to get to a stage where they're able to comply. This isn't something that you can just pull together the last minute. It can take months or even more to capture the information, understand it, and produce a meaningful report. And so I think you're absolutely right, Zoe. The key message for mid-sized and OMBs in the UK is that the UK SRS will shape the market beyond those regulations, and they should start planning for that right now.
Right. Thank you. I think I want to move it into some sort of practical steps, because there may be some business owners who are listening to this that might be part of a large supply chain, might be in financial services, might be in property, which are some of the sectors that we think will be most impacted earliest by this. And they might be thinking, we need to do something. What do you think the first steps that they should be taking?
When we help businesses with those first steps, it typically follows sort of two aspects. The first is a bit of a horizon scan. So over the next 12, 24 months, how and why will these standards start to affect your business? Is it the regulatory frameworks? Is it the legislation? Have a look at those proposals and understand to what extent are you likely to be in scope. Is it your customer base? Is it their customer base? Is it going to kind of work through the supply chain? Is it investors? Is it lenders? Is it another group of stakeholders out there? And then once you've worked out who's going to be driving this for your business, there's an opportunity to go and engage them and understand what they're really looking for, what their appetite is, and what sort of the realistic expectations are for this and for your business. The second step after that horizon scan is then what we call a bit of a readiness assessment. at the start, Tom, I think you mentioned that a lot of companies are going to be reporting on some aspects of this already. And so this doesn't mean that you have to start again from scratch, but compare what you do now to these standards and start to look at the governance, the systems, the controls that you've got in place, and understand where are you already at that required standard, where have you already got a good level of information, where do you need to do a bit of improvement, and where are the gaps? And that can then be turned into a bit of a roadmap and start to think about the timelines behind that and how much resource you need to put behind it. It's worth saying as well that there is a huge amount of information out there at the moment on these standards and how to break them down and how to sort of go through these early steps and really create a meaningful roadmap and a meaningful readiness assessment. Saffery, we've run a webinar recently on this. The recording's available to start to understand a bit more of the context behind it. We've got another one on the 1st of July 2026 to help companies really get into the detail of it and go through that process themselves and develop their own readiness assessment. And we're also producing content and thought leadership and a dummy sustainability reporting standards report to really demonstrate what this could look like as well. So there's lots of information out there, lots of support available. But I suppose, that key message is that it's important for businesses to really understand where they are now, where they need to get to, and to start planning.
Thanks, Alastair. And that's very similar to how we would approach, I suppose, any major change program. So it's the understanding of where we are, the current position, identifying the gaps, and then prioritizing actions in a structured way. So it does follow probably what we would normally do with any business in looking at something like that. So yeah, I completely agree with that.
Great. Glad to hear it.
So I guess sort of beginning to round things up, if there's one takeaway for businesses, what's that for you, Alastair?
Well, if we look at, as you say, Zoe, some of the other legislative changes and standard changes that we've seen, or if we look to some of the other markets around the country and we can learn from them, I think one of the key lessons is that the businesses that move earliest on these standards tend to be the ones that avoid the compliance risk, that capitalize on that first mover advantage and avoid that last minute reactive scrabble and the associated risky and costly reporting. And so especially for the mid-sized firms that are listening or OMBs across the UK, then the opportunity is to start planning for UK SRS right now.
Thanks. And I suppose this is just a reminder that everything we've discussed today is for general information only and doesn't constitute formal advice. So please do make sure that you seek the appropriate professional guidance before taking any action.
I think we should probably wrap it up for today. A huge thank you to Zoe and Alastair. There's lots for businesses out there to start thinking about, particularly around SRS 1 and 2, as well as some other sustainability legislation we've mentioned. And that's even before we get into any kind of mandatory requirement for adoption. I hope this conversation was useful and we've got you thinking about sustainability and how it may impact you and your business, whether that's understanding your exposure, thinking about readiness, or just getting started. Please do reach out to Alastair. I'm sure he and his team will be more than happy to help. And there are lots of insights as well as webinars coming up at saffery.com. If you enjoyed this episode, please subscribe on your favorite podcast platform and leave us a review. Thank you very much for listening, and we'll see you next time.